Welcome back to The Takeout. Welcome to the Conversation Corner. This week, oil prices fell to a 3-month low after the announced tentative deal to end the war with Iran and potential reopening of the Strait of Hormuz. On Sunday, President Trump wrote on Truth Social, quote, "Ships of the world." I'm sure they were all listening. "Start your engines, let the oil flow," unquote. Not so fast. Today, prices rose after President Trump threatened to bomb Iran. We've been over this. If Iran doesn't behave. That's a direct quote. Right now, West Texas Intermediate selling $76 a barrel. Brent crude, $79 a barrel, both under 80, which is good. But what does it all mean? I'm joined now by Arjun Murti. He is a partner at the energy firm Veriten and the author of the Substack newsletter Super Spiked. Arjun, what does it mean? Oil prices trading globally below 80. What does that mean for gas prices in America, and how soon will we see them translate downward?
We'll see how lasting this piece is, as your prior segment alluded to. There's a lot of uncertainty, but at least in the near term, whatever relief we're going to have, I think some ships are going to start transiting the strait again. It takes off, at least for the next several months, that worst case scenario that you run through all these strategic petroleum reserves and other inventories, and you run the risk of oil going to 150 to 200, $5 or $6 a gallon gasoline in the U.S., and that risk of global recession. That, if it's not entirely off the table, it is certainly being pushed to the right. And to me, that is the most important takeaway from what has been announced earlier this week.
And Arjun, to my ears, you just said something that's really important. These strategic oil reserves, as I've read, they were getting very, very shallow. That may be as much of a reason for this off-ramp as anything else.
Yes, sir. We probably had, depending on your estimates, another several weeks to a month and a half of, at least in the U.S., those reserves getting to the low end of the range. We're now below the minimum SPR that at the bottom of the Biden regime, and U.S. commercial crude inventories are also down to their lows. The other big offset has been China. China has dramatically reduced their oil imports without any seeming effect on their demand, which means they are drawing down their strategic petroleum reserves. They had built them up massively ahead of this war. Maybe they got lucky, maybe they knew something. I think it is very uncertain on what role China is going to play, but they are an important factor on do oil prices stay low.
What is the risk profile, Arjun, for the companies that run the vessels in the Strait and those that insure them?
You're asking the number one question here, which is, it's one thing to say the strait's going to open and there's going to be some escorts or the mines are going to be cleared and they're going to get out. If you're a ship owner or a ship company, are you going to want to go back in? Is one confident the drones, the missiles are not going to head your way? And it might not be from whoever's the notional leader of Iran. It could be from some offshoot group. So it's a very tricky region. And if there was one stat to follow, it would be who's going back into the strait, because that is a material consideration to then who can come back out.
And what about the ability of the global economy to sort of reset itself in a way that gas prices here in the States and maybe even in Europe began to noticeably decline? Is that four weeks off, 6 weeks off? I know there are a lot of variables, but if things stay stable, 4 to 6 weeks?
4 to 6 weeks is a good time frame. It may even be a little quicker than that. The crude oil price, the WTI that you noted, has already fallen $20, $30, $40 a barrel. That normally would directly translate to lower gasoline prices in the near term. The only thing to keep in mind is we're coming out of the winter shoulder months to typically the strong summer driving season. That historically has been a time of naturally higher gasoline prices. The other thing that goes into gasoline is the refining margin, and refinery outages have increased around the world. Ukrainian attacks on Russia has impacted the supply of gasoline globally, and that's one of the factors that's also going to weigh into how much does U.S. gasoline come down. But it may not feel great to consumers, but not having $5 or $6 a gallon gasoline, that is a huge victory. I'm not sure we get below 3, but some easing from where we are today should be happening in the next month or two.
Arjun Murti, great stuff as always. I appreciate it. Thank you. And I hope you enjoy the Knicks parade tomorrow in New York. I know you're going.